Welcome back to More Wealth Retirement Talk. I'm Dave Moore here with Shawna and Jacqueline. And today we're talking about something that's been on just about everyone's mind lately, the market, the volatility, and honestly, just all this uncertainty that's out there right now.
Absolutely. I think a lot of people are feeling it. Even if they're not checking their accounts every day, there's just that underlying sense of something feels off and the unknown.
Exactly. And so what we want to do today is not just talk about what's going on, but we really want to help people understand how a proper plan should handle times like this so that you're not reacting emotionally every time the market moves.
Before we get serious, can I drop a joke on y'all?
Absolutely.
Of course.
We're waiting for it.
All right. In honor of the weather, turning into golfing weather here in Arizona. So 3 golf clubs went to a bar. The putter asked for a beer. The wedge ordered tequila. The third said, nothing for me, because I'm the driver.
Actually, I give you an A+ for that one. That's pretty good.
That's pretty good.
That's pretty good.
I'm sure our listeners will like that one. It's a lot better than the suggested ones. I'm not reading that.
Well, that's why we let you pick them out.
Yes, absolutely. Well, before we get into it, let's do a little quick update on each other because I feel like we haven't seen each other for some weeks and, there's just lots of updates in your lives and some soccer updates and moving updates and I want to hear it all.
Yes, and you have experienced a lot of snow lately too. So
yeah, let's go with you first.
Well, before we were talking on the show, I shared an embarrassing story of I had to use a snowblower for the first time in my life. Yes, I did use FaceTime and I was FaceTiming my dad, showing him how the heck do I use this? I did end up getting it running, but I did not do a very good job. I got my car out though. That was the most important thing.
Hey,
Job
mission
well done,
accomplished.
Yeah.
Absolutely.
You'll be better at it. It's like when you first start mowing lawns, right? You just get better and better and better at it.
How do you mow a lawn?
Put your own personality to it.
I've never mowed a lawn yet.
Okay, see?
I've never mowed a lawn.
Really?
No.
Oh, you're about to.
I never had to.
Where we're going, you're about to.
Okay, but at least when you mow a lawn, you get some sunshine, a nice tan. Snow blowing, what do you get? What do you get? Freezing?
The snow blowing. It's
snow.
fun.
That's so much fun.
Yeah.
Hey, when you're
do it.
When you're in Arizona in March and it's over 100 degrees, snow sounds fun.
Yeah,
it actually
snow
kind of
sounds really
does.
fun right now.
Because this is like July, August weather. And it's a little too hot.
Not
We're
quite August
toasty.
yet.
Yeah.
But yes,
maybe.
definitely end of June, July weather.
Mm-hmm. Yeah.
What else is happening in your world?
Well, club soccer, at least for us, is over. She still has 2 games, but we have to go we get to go, I should say, to Nashville. So kind of like happy, sad, ready to move on. But, it's been a long journey because she's the youngest. So it's like the end of all youth sports, not just hers.
Mm-hmm.
So
we ended it in Vegas. It was a
we ended up in Vegas.
Soccer tournament. So had a lot of fun with the parents.
Yeah, good.
Girls had a good time.
We had fun, but I was kind of sitting there at halftime and I was like, oh my gosh, these are the same people that we've sat together for 4 years and they're really, really cool people. And it was kind of like, the more you think about it, the sadder you get, because there's a kind of like a sideline, call it the cartel, but it's like a sideline mafia that sits over there. And I think every team has them, little cliques, and got to know some really good families, had fun with them, and certainly not the end, but soccer was the excuse to get together on the weekends and, stuff like that. So just on to a new chapter.
Yep. Turning the page.
I think Jen is ready,
And how's moving?
Ooh.
Well, it's a step-by-step process, because we're going to be back and forth a lot more between Tennessee and here. So we're getting some transition out there and then we're transitioning into a new place here. And so, yes, a lot of work, but it's a lot of fun as well. It's nice though, being able to be, back there in Tennessee with some of our clients. And then we come back to Arizona for the clients here. So, it's a transition for sure.
So it's not a real big goodbye to Arizona.
Yeah.
It's goodbye half the time.
Yes,
exactly.
Absolutely.
Right? Exactly.
Yeah.
Exactly.
So we'll be back. We'll certainly get our Arizona fill, and we have really good clients here and really good people that it's going to be nice to see when we come back. And, there's a lot of good about Arizona. A lot of good about Tennessee. So
Yep.
We're going to manage it.
Well, hopefully
Yeah.
after this whole moving fiasco, right? Then you guys will be able to fly and it'll be a lot quicker.
Yes.
Correct.
Yes.
But now
Yep.
it's
That's-
driving and it's just a pain to drive back.
That's the burn, is the drive,
Yep.
right? Because we've seen everything. We see the same sites and go through the same states, and it's neat. Like a lot of people fly, they don't get to see those things, but I think after the second trip, we're like, we're ready.
We're ready for a break, or having things like tornadoes come up, and our travel plans are halted.
Ooh.
Yeah.
So we had that the last
delay
time.
our trip back last time, a couple of weeks ago, because of tornadoes.
Wow.
So we'll time our travel and where we're at, which state we're in, based on weather. Probably we'll skip the August heat in Arizona, but maybe so.
Yeah.
It's kind of similar, I guess, to how pilots, they're always checking weather on their route, type of thing. We never think about that when we're passengers on the plane, but the pilots have to have all that stuff down.
Yep.
And so we do the same thing. We just plot our routes, and we know where we stop every time, and we have to check the weather today, tomorrow. Right now, I'm already checking it for next week. So yeah,
Awesome.
fun stuff.
Very fun. All right. Well, let's dive into this episode.
Welcome to More Wealth Retirement Talk, where finance meets fun.
Join financial expert Shawna Moore,
Sports analogy pro and dad joke king Dave Moore,
And Jacqueline Gladhill, who keeps us all on track,
as we break down retirement planning with insights,
laughs,
and a whole lot of more wisdom.
Well, let's get serious here. So with a lot of things going down right now in the country, a lot of volatility, but there's not just one thing causing it. I mean, it's kind of a combination of factors. So first, you've got ongoing global tensions, and I'm not going to say the W word, but the conflict, going on in the Middle East, which won't last forever, despite what people are forecasting. It still creates uncertainty. We want to respect that, uncertainty in the markets. Investors don't like unknowns, and geopolitics is one of the biggest ones.
and then you talk about the oil prices on top of that, right? And when there's conflict or instability globally, oil prices will tend to move. And that impacts everything from transportation costs to just everyday goods, which then feeds into inflation.
Yeah, and inflation, the Fed Reserve is still watching that pretty closely. So that's where interest rates come into play.
Mm-hmm.
Right now, there's still a lot of uncertainty around interest rates. Are they going to come down, stay higher longer? And that uncertainty affects both the stock market and the bond market.
So when you combine global conflict with oil prices, inflation concerns, and interest rate uncertainty, you end up with what we're seeing now, which is a market that's a little more volatile than people are comfortable with. So Shawna, when clients are seeing all this, tell us what you're telling them.
Well, honestly, this is exactly why we plan with our clients the way that we do, because, none of what you, Dave, or what Jacqueline just talked about is new. These cycles, they happen over and over again. And the difference isn't what's happening in the market or the world. It's whether or not you're prepared for it. And this is where I'm just going to be very direct here. If you're feeling a lot of anxiety right now about your finances, there's probably a reason. And it usually comes down to one of two things. One, either everything that you have is still invested in the market and you've been told, hey, you can just take out 4%, you're going to be fine. Or you've been pushed all into conservative products like annuities, and now there's little to no growth to keep up with inflation. But here's something that we've been talking about with our clients lately, and what I want people to really think hard and honestly about. Think back to 2008. After what happened in 2008, I remember that many people said, I'm never going to go through that again.
Right.
So they said they're going to be more conservative. They're going to be more diversified, more strategic, more protected to make sure that doesn't happen. But fast forward to today, did anything in your portfolio actually change? Or are you still invested essentially the same way? Are you still heavily in the stock market waiting to get back to the top before you make any decisions or changes? So when the market dips, are you just hoping it comes back again? Or have you actually taken some of your wins off the table over the years? Have you repositioned a part of your portfolio so that it's protected, so that it's designed for things like income, and so that it's not all exposed to market risk? Because what I see most often for people that are coming in is that 2008 taught people a lesson, definitely. But a lot of people didn't actually change their strategy.
Shawna, that's such a great point. It's not just about remembering what happened. It's truly about doing something different because of it, right? I mean, we're making better choices.
Right, exactly. And that's where real planning comes in and why it's so important.
All right. So, Shawna, let's break that down.
Okay. Into our bucket strategy.
Yep.
So we have a 3-bucket strategy. The first is your short-term bucket, and that's the money that you're going to be using for income right now in the next few years. So this bucket should not be exposed to market volatility. This is where we use things with our clients, such as the right types of annuities, maybe it's structured notes or other income strategies that are designed to be stable and provide stable income.
So this is basically a paycheck.
Exactly. And that bucket's one of the most important. So you have your paycheck covered with that. But then you need to have part of your assets in what we call kind of your midterm, your second bucket, money that you're going to need in maybe 3 to 5 or 7 years. So this money can grow. It can still have some market volatility, but it's positioned a little more conservatively, but we want more growth from that. So it can have a little bit of market swings.
In other words, your next paycheck.
Yes. So this is kind of your next few years of paychecks. And then the third is your long-term bucket. And this is where market investments really live, where you can have more volatility because we're looking for things, for an inflation hedge for the future, because when costs of goods go up, you're going to need an account that's growing at a faster rate. So this is money. The key is you don't need this money right now. You need it for the future.
So you're not forced to sell when the market drops.
Exactly. And that's where the stress disappears. And so when we've been taking calls from, some of our clients, and when we remind them and go through these buckets, this is how we have everything positioned. They're no longer nervous because they remember, hey, this bucket that has a little bit of volatility right now, we're still managing it, but you don't need that for right away. Right now, your income piece is safe. It's stable. And so if you are positioned properly with different buckets for different time periods, it's okay if you have a small downturn because you have 7, 10, 12 years before you're going to need to access those funds. And so when we talk through that with them, they kind of have a peace of mind with that. But if you're heavily in the market, you have no clear income plan, you have to watch everything super closely. And that's where the, emotional decisions come in, and that's where the fear comes in. But again, when we talk to our clients that have gone through our full process, they're not reacting the way that people that are not with us are coming in and talking to us because of what's going on with their income plan, because maybe their advisor didn't go through that process. So our clients understand their income, their plan, and they're not worried about the short-term market movement because they have these different buckets.
Yeah, I really like that, Shawna. It's about long-term growth and separating it and also diversifying it. And, I think that this is where a lot of people can get a little stuck, because on paper, things can look really good for them. Like someone might say, I've done well, I've saved $1 million. I feel like I should be in a good position. But if you really think about it, if you have $1 million saved, but no clear plan for how that actually turns into income, how confident do you really feel?
Mm-hmm.
Yeah. And I think that's where a lot of people don't connect the dots, because they spent their whole life focused on growing the number, but not necessarily what the number is supposed to do for them. And then I'd ask, if you're in your 50s, maybe early 60s, and you're still heavily in the market, say 80, 90% in stocks, what's your plan if the market drops right as you're getting ready to retire?
Mm-hmm.
Are you going to wait it out? Are you going to delay retirement? Are you going to keep pulling from it anyway? Or have you actually structured things so it doesn't impact your lifestyle?
Exactly. And this is honestly one of the biggest things we see, especially with higher net worth individuals, is that they've done a great job of accumulating their assets in their retirement accounts, but no one has really helped them transition from that growth mode to an income mode as they get near retirement and in retirement. So we'll ask clients, when they come to us and they have another advisor, have you actually mapped out where your income is going to come from month by month? Oftentimes, most of the time, they don't. Other questions to ask is to think about for yourself, for our listeners, do you know which accounts that you're going to pull income from first when you retire? Do you know what happens if the market is down in one of those years and now you have to take income out of those same accounts?
Yeah, well, because at the end of the day, I think the real question is, do you feel confident in your plan? Have you stress tested?
Exactly.
Or are you just hoping everything works out?
Yeah. And, hope isn't a plan. And so, when you really take a step back and look at the things we've talked about just today with the volatility, with the headlines, the uncertainty, and again, none of that is actually new. But what is different is how prepared you are for it, or maybe unprepared, because volatility itself isn't the problem. There's always going to be some volatility. But what the problem is not having a plan that accounts for that volatility. And so what we see over and over again, it's that people spend decades focusing on growing their money, but they spend very little time understanding how that money is actually going to support their life in retirement. So when the market moves like it is right now, when things feel uncertain, there's no structure to fall back on. But again, when you have a real plan in place and you work with an advisor who puts this plan together for you, when you know exactly where your income is going to come from, when you've separated your short-term needs from your long-term growth, you don't react the same way. You're not watching the market every single day. You're not making emotional decisions. You're not hoping things recover in time so that you can stay with your retirement time frame. You're operating from a position of clarity. And that honestly is really the goal, not to eliminate volatility, but to make sure that the volatility doesn't control your lifestyle.
If you're listening to this and you're thinking, I'm not totally sure where I stand, or I don't know if my plan is really set up this way.
Or even if you feel like things look okay on paper, but you're not completely confident in how it all works together.
That's exactly why we offer a complimentary discovery call. So this is really just a simple conversation where we can sit down, we can look at what you currently have, what you're currently doing, help you understand, do you actually have a plan, or are there gaps that need to be addressed? There's no pressure, no obligation. It's simply about giving you some clarity and helping you make more informed decisions.
You can go to morewealthtalk.com. That's 2 O's and more.
Or call 833-4-MY-WEALTH to schedule a call.
Also, if you're someone who likes to learn a little bit more before taking that step, we also offer a complimentary copy of my book, Retire with More, The Holistic Approach for a Relaxed Retirement. We're happy to send that out to you. And it really just walks through our entire philosophy, how to think about income, protection, and long-term growth, and how to put that all together so that it works together.
And if you found this conversation helpful, make sure to follow the podcast on Spotify, Apple Podcast, or Amazon.
Share it with someone who might be feeling the same way right now, because a lot of people are. We're feeling very uncertain.
Yes, exactly. And whether you decide to work with us or not, the most important thing is that you understand your plan and that you feel confident in it. That is absolutely the most important piece.
So remember,
hope is not a retirement plan.
But having the right one can give you peace of mind no matter what the market is doing.
Absolutely. Well, thanks, guys, and I'll see you guys next week.
See you next week, everybody.
Thanks for tuning in to More Wealth Retirement Talk with Shawna,
Dave,
and Jacqueline.
We hope you enjoyed the mix of financial insight,
sports wisdom,
and a few dad jokes along the way.
Join us next week for more ways to plan smart,
laugh often,
and retire with confidence.
Advisory services are offered through More Wealth Partners, LLC, an investment advisory in the state of Tennessee. Insurance products and services are offered through More Wealth Management, LLC, an affiliated company.